Afternoon, dear ladies and gentlemen. It is our sincere pleasure to welcome you to today's concluding panel discussion, rounding up our ASEAN Forum Going Digital webinar series. Quo vadis? This currently is probably the most frequently asked question in almost every field: economy, business, social and private life, education, politics. What are we up to with and beyond the pandemic? As for today, we will specifically share some insights and discuss them as to the economic developments to be expected in and beyond the Asian region. As to the schedule of today's webinar, we will start with a keynote speech on Asia's economic outlook delivered by Charlie Lai, followed by our lively international panel discussion, and we will conclude today's session with a Q&A for you to submit your individual questions and to discuss them with our panelists. Before introducing our first guest to you, please allow me to shortly refer to the technical side of our virtual program. Though we probably all had our fair share of digital meetings, there is a quite colorful bouquet of different platforms being used with slightly differing functionalities. As to the go-to tool we are using, you will find the following features at your disposal. In the top right corner of your screen, you will find the control panel. Here you may adjust the audio settings and choose between your headset or the computer audio. Please note that as an attendee, you are muted by default. This provides you with the personal freedom to grab a cup of coffee, have a snack, or sneeze whenever you need or want to, without anybody else noticing. A little further down on the dashboard, you will find the question panel. Please insert all your questions or comments here for us to take care of. You may do so anytime during the session without any restrictions, as it will cause neither irritation nor disruption to the program. We will take down all your questions and hand them to the moderator for the Q&A session at the end. And now, it is my sincerest pleasure to welcome our first guest speaker. We are most delighted to have Charlie Lai on board as keynote speaker today. Charlie is a senior economist at the Commerzbank Singapore. He holds a master's degree from the Australian National University, and has a broad range of experience in the Asian and G7 markets. He worked in various capacities in private and investment banking and has been covering Asia as a regional economist and FX strategist since 1997 already, looking back on more than 23 years of professional experience. Thank you so much for dedicating your time and expertise to us today, Charlie. We are honored and pleased to have you with us. And now the stage is yours.
Thank you, Bettina. I think I would need to get control of the screen, right?
Just give me a short moment to pass on the control to you. Just a second.
Yep.
And just a second. So here we go. Please feel free to share your screen with us, Charlie.
Great, I got it. So can you see my screen now? I assume you can. Okay. Okay, you can see my screen, right? Thank you very much, Bettina.
Yes,
thank you very much, Rödl, for organizing. Oh dear.
Would be great if you could just reactivate your video for us to see you while speaking. Yes, perfect. Thank you.
Sorry, it's something must have been clicked there. Okay, thank you very much again for the kind introduction. Thank you, Rödl, for organizing the seminar and the invitation to share. And I bring you very warm greetings here from Singapore. You know, life here in Singapore is almost back to normal. We can go out freely, we can go to restaurants, etc. The COVID situation is more or less contained. The government here has done really an excellent job in sort of containing the situation. So I'm going to talk for about half an hour or so. David, who's going to moderate the panel later, has generously given me half an hour and probably another 5 minutes during my panel discussion, sort of a lot of time. So altogether, I may have about 35 minutes. And during the panel discussion, I won't barred from saying anything else. So this is what I'll go through with you. Let's talk about the global backdrop. Talk about the COVID shock, the Fed, China, ASEAN, and let's really finish off with the US-China relationship and what that really means under Biden. So first thing, Look at the chart here on the top side. When you look at global growth, the two numbers you have at the back of your mind is 2 to 4%. Anything below 2% is global recession. It won't be zero because you're always going to have 1% productivity, 1% population growth, right? So anything above 4 is robust growth. Look at this chart here. The COVID recession, really a deep, deep recession, the deepest and probably even the shortest. The numbers, the global growth minus 4.4. So this year you do look for some sort of rebound by default. US, the economy is open. The US minus 3.5, EU minus 7 last year, 5 this year. And look at China, the only major economy that grew last year, 2.3, expected to be even faster this year, about 8%. Point number two, it's often said that a crisis merely accentuates existing trends. For example, digitalization. We've noticed that already, in e-commerce and health, education, retail, across the board. What about deglobalization? Deglobalization, even the whole theme about the supply chain revamp, it actually began even way before Donald Trump came on the scene. The relocation of a supply chain out of China, because China over the last 20 years is no longer cheap. You already seen sort of production move back to Taiwan, Vietnam, Southeast Asia. What about another trend? The winner takes it all mentality. Think of ABBA, the song. The winner takes it all. It's really the whole theme about the big firms to get bigger, richer at the expense of the smaller firms. Income inequality, yet another trend. The fractures in society. President Trump is not a disease. You may think it may be the case, but it's really a symptom of a disease. It's the social, the income inequality, the social fractures that's been going on for many, many years. What about the US-China tension? With COVID, it merely accentuated that even further with all the blame game. But if you take a step back, there are really a lot of positives that the world can look forward to, namely in terms of the robotics, technology, renewables, that can really unleash the increase in productivity that all the economists, everybody's been sort of waiting for many, many sort of years now. So maybe it will touch on a bit more on the RCEP and CPTPP in the panel discussion later. Let's take a step back. A nice way to sort of just see where we sort of come from is that think of it, the COVID shock as really a combination of 4 shocks: a supply, a demand shock, a COVID, which is a health shock, and a financial shock. But you might say, where is the financial shock? Well, thanks to the Fed, there was really no financial shock. At least it was very short-lived. So in terms of the supply shock, IMF will call it the Great Lockdown Recession. Everything came to a halt. It was a Prime Minister of Australia, Treasurer in 1990, who made this famous saying, or infamous saying, that this is the recession Australia had to have. And in a sense, the global recession that we went through, it's also the recession the world had to have, because you got to lock down the economy, practice social distancing in order to safeguard lives, right? So now we're in the process of at least repair, a bit of reopening, but the revamp to supply chain will continue, and it won't look the same ever again, because already the trend was continued of the relocation of supply chain away from what? Away from China, away from the cheapest possible location, long supply chain, ultra efficient production sort of method. With COVID, it's basically forced people to build in a bit more redundancies into the system. So focus less on efficiency, maybe build in a bit more resilience. And by onshoring, reshoring, that may not necessarily do the trick as well. So it's going to be a combination of both. So I asked 2 questions here. Number one, inventory is evil, taken from the comment from the Apple CEO Tim Cook, who once made the comment, just-in-time production, very low inventories. So that thinking might have to change. Number 2, is globalization dead? You see this chart of global trade to GDP. The last 70 years of globalization, you can more or less say it was synonymous with Americanization, right? But actually, since 2008, global trade to GDP has more or less stagnated, right? Will it necessarily reverse and go down and reverse all the gains of the last 70 years? Not necessarily. So it may be globalization 2.0. It will be another form of globalization. Okay. Number two, the demand shock, with the lockdown of the economy, etc. So look at the US, minus 3.5 last year. China managed to grow 2.3. But in terms of the severity of the contraction, if I compare Q on Q annualized terms, the US contracted 31% Q2. China actually contracted 40% if I compare Apple with Apple, right? But how come China was able to really rebound a lot faster in tackling the COVID situation? They managed to lock down the economy, get the virus under control, and slowly reopen. So in other words, it's a very important point that tackling the health crisis really provides a foundation for the economy to recover. So these are just the unemployment rates in the US, a big spike up in March, April. US starting to see a bit of improvement. So the latest number for January, 6.3% unemployment rate, still double pre-COVID level. So we're not necessarily out of the woods as yet. Okay. Then the health shock, which is the COVID shock. In order to tackle the health shock, you need a health solution, right? So before vaccine, definitely is a big way, a part of it. Another way is social distancing, etc. So here's just a chart of the cases per million. So you see the red one is UK, blue one is the US, green is Spain. So at least for UK, past the half for US as well, at least we're starting to improve. President Biden is aiming to get 100 million people vaccinated in the first 100 days. Good ambition. Some may even suggest it could be even more ambitious, but at least it's a good start. If you can get towards 100 million, about 1/3 of the population compared to about 10% currently. So there is light at the end of the tunnel, but make no qualms about it. It's going to be a long, long tunnel, right? So we're not necessarily really out of the woods. So in terms of Asia, the blue one here is Malaysia, which is still sort of trying to get on top of the situation, along with Indonesia. So most ASEAN countries are still trying to grapple with the infection. So with vaccine coming on stream, the next quick question is really the rollout, the pace of vaccination, and may take a bit of time still. So this right chart here, which I got from Bloomberg, is an interesting chart. Is lists down the front runners in the vaccine rollout. And you see Israel, UAE, even Bahrain, really way ahead. Israel, about 60% of the population vaccinated already. So this is really the key thing to watch. The US only 11%, the pace of rollout now. So that's why we say this year is really a year of transition, more than just a synchronized upturn because of the drop last year. So here's another chart from Bloomberg, which is the COVID resilience index. So they basically it's a compass index. I just take a whole bunch of indicators, the cases, the fatality rate, the state of your healthcare system, the developmental sort of index, etc. And they put it onto a composite index. And you see here, New Zealand is really top of the tree here, right? Similarly, the most, and they have done an excellent job. New Zealand, Singapore, Australia. Then the other end of the spectrum, you have Mexico, South Africa, Argentina, Brazil is really struggling. So one thing I will say, one other factor that's really distinguished between how the countries have able to handle COVID is really leadership, right? So you often say in times of crisis, this is where leadership will really come to the fore. And in these countries, New Zealand with Prime Minister Ardern, Singapore, they've really done an excellent job in showing leadership. In the first point of leadership is what? Is really recognizing the severity of the situation very, very early on. Okay, so let's talk about the Fed. I'll go through this quickly, and then we'll go on to Asia. So how many of you remember this pop group back in the 1980s, the Boogles, right? With this song, video killed the radio star, right? Now, in the financial markets, what killed what? Well, the Fed killed volatility. You look at this side, so the black line here is the VIX index, volatility in the equity market. Maybe not a lot of us would be aware of the MOVE index, which is the volatility in the bond market, right? So that spiked up in 2008 GFC, but in the COVID crisis, it didn't really spike up that much, and for a very short time, all because of what? One word, because of the Fed. Now, apart from the Fed, the fiscal response has also been so potent. some people will remark the amount of stimulus, fiscal stimulus that the government put in the 2.3 trillion, the CARES Act, the 0.9 trillion, etc. It's more than the total stimulus in the last 5 recessions. So that takes you all the way back to the 1970s, albeit the nominal amount is always going to be bigger now. So if you add in the 1.9 trillion, it'll be 25% of GDP, huge stimulus. But beyond that, it's also the Fed. Now, this yellow red line is just the S&P 500 index. The yellow shaded bar is the Fed's balance sheet. Take a look at these numbers. In 2008 to 2014, the Fed added 2.3 trillion worth of liquidity in 6 years. Okay, from February to May 2020 last year, the Fed added 3 trillion worth of stimulus in just 3 months. Wow, right? So what the Fed did in 6 years, they did 30% more in just 3 months. That basically explains why the market did what it did, rebounded. Okay, so here's a movie that everyone's sort of been waiting for. Don't worry, we'll probably all will catch it before we all die. So No Time to Die, right? It talks about the bull market that the Fed basically unleashed. The 10, 11-year record bull market died suddenly because of the virus, but then it died, it was buried, and it basically came back to life in just a matter of 3 months, all because of the Fed. So by all indicators, the markets are indeed very stretched. You look at the Kate ratio, the cyclically adjusted PE ratio, or the Warren Buffett's favorite indicator, market cap divided by nominal GDP, they're all at record levels, at least for the market cap. In the Kate ratio, even more expensive at 37 compared to 33.9 before the crisis, albeit not as much as the dot-com bubble or back in 1929, but you're heading there. So the key question we ask is that, what's driving all this and when will it die? Well, it's all because of the Fed, and it's all because of FOMO, right? You look at these acronyms we have here. So if you have teenage children, you know what FOMO is, the fear of missing out, right? And all it's because the Fed's cut rates to 0, it's because of TINA. So what is TINA? There is no alternative. So the market sentiment, the financial market sentiment now is really a BOD sentiment, right? Not a bond sentiment. It's not James Bond, it's James BOD, B-O-D. So what is BOD? It's buy on dips. Market corrects, it's an opportunity to buy. Now, how long can this go on for? As long as it wants to. When will it stop? It'll stop when it stops, right? As when inflation picks up. I got one more chart on just the global backdrop, financial side, and then we'll move on. Okay, it is indeed a V-shaped recovery in the stock market, right? It's got a double boost from the Fed and the fiscal side in the blue corner. Then in the red corner, you have the real economy, Main Street, as opposed to Wall Street. And they're probably going to see a bit of loss in momentum because of the second wave resurgence. So remember what I said earlier, a crisis merely accentuates existing trend. One of the existing trend is not only income inequality, but the wealth inequality. The top 1% basically is getting a lot more, on 35%, compared to the bottom 90 is only 28%. Hence, it gives rise to what some people call a K-shaped recovery, a differentiation between the haves and the have-nots. The haves have even more, the don't have even less, right? So, we look at this K recovery, it's really a differentiation between the developed world and the emerging markets. But even within economies, you see that between the high income earners and the low income earners, between the big firms and the small mom and dad shops. Look at what happens even with the lockdown across the world. Your big firms were allowed to stay open, where the small firms had to close, right? So this is something that the authorities, governments will need to address going forward. Okay, let's talk about China. Just 2 slides on China, and then we'll talk about ASEAN. So we finished the introduction. So here we go. So with China, I'll just make 2 points, right? Look at the fiscal monetary stimulus in the West, US, Japan, Europe, US about 44%, okay? But in China, it only amounted to about 15% roughly. It's always very difficult to get exact numbers on the fiscal side or even the monetary side, what actually has gone into the economy, but as a rough number, right? So 45 compared to say 15. Question, why the hesitancy from China this time around? Because in 2008 financial crisis, China basically took out the bazooka and was the atlas to the world that held up global growth, right? This time around, they were rather reticent. Why? Quick answer, because of deleveraging, because of the huge increase in debt. Very quickly, debt in China in 2008, 6 trillion. 2020 Q2, 39 trillion. It went from 139% GDP now to 280% of GDP. So China was more reluctant to really take out the bazooka yet again, because they're worried about the surge in debt, the increased risk of NPLs, etc. Instead, how then did they manage to get the economy going? Social distancing, lockdown, strict orders, take full responsibility, right? So China. So let's talk about ASEAN. So just big backdrop first. So ASEAN in terms of export share is 7.3% global export share. So it's actually the fourth highest behind China, US, Germany. In terms of imports, it's the third highest, 7.2. You know, in 2020, China became China's largest trading partner, overtaking the EU, right? So so that's where ASEAN sort of sits. Now, in terms of percent of GDP within ASEAN, let's look at the population. Of course, Indonesia, about 4/10 of the population here in ASEAN. In terms of GDP, Indonesia got 35%, Thailand 17%. So between these two guys, you're at 52%. Then the next three is basically 10-10-10, right? Philippines, Singapore, Malaysia, and then Vietnam. So within these guys, it's already around 95%. So your Myanmar, Cambodia, Laos, Brunei, they're all relatively small, only about 5%. Now, in terms of GDP per capita, right? So Indonesia, 4,000, Thailand, 7,000. Now, Singapore is, of course, the outlier here, 58,000. Whereas everybody else, the average, if I take a weighted average here, it's around, say, 12,000, but that's including Singapore. So if I take out Singapore, it's only around, say, 5,000. Now, what does 5,000 mean, right? Below 1,000 is a low-income country. Between 1 to 12,000 is middle income. Anything above 5 to 12 is upper middle income. And that's where China sits, upper middle income, as opposed to a high-income country, US, 63,000, Singapore said 58,000. So it's also a big dichotomy across the region here. So ASEAN, look at 1997, big recession. Then look at this, during the global financial crisis, ASEAN didn't go negative, right? Why? Because ASEAN already walked through the valley of deleveraging in 1998. It came into the global crisis not as leverage, right? Corporate balance sheet, not as impaired, the currency is more flexible, debt levels are much lower. But then the health crisis really hit it badly because of the lockdown, the state of the health infrastructure, etc. So this year we do expect it to rebound, continue growth next year. So let me just spend a bit of time on this slide. So go about 15 minutes. Let me spend, say, 5 minutes on this, and then we'll finish off on the US-China relationship. Okay. So if I just go through the country by country, just very brief. So with Singapore, I guess with Singapore, you know, Singapore's purpose in life is to act as an entreport center, right, for financial activity, sea activity, air activity, really act as a hub. So in order for Singapore to, we're going to rebound this year, definitely, you know, 5% plus as the economy reopens. But in order to see a sustained growth, you really need to see the region really come back into play, really open up again for travel to restart. But the good thing is that the government has a really strong fiscal balance sheet, right? With all the fiscal prudent policy of many, many, many years, right? In fact, even during this time or last year when the government came with $100 billion worth of stimulus, which is almost 20% of GDP, the fiscal muscle to go through, it didn't really have to issue bonds or borrow money. it drew down on past savings instead. Okay, so that's one aspect, so that sort of helped the resilience. The other aspect that Singapore was also exposed to a certain sector that is doing very well in the world right now. And what is that sector? The electronics sector. You know, I think the experts will tell us that even this year, there's still going to be a shortage in chips. So that will probably last for a while, but at least the demand is there. You know, with the 5G rolled out, electronics demand, with work from home demand for IT, etc. Incidentally, I just put down here EV cars. You know, there's a Korean conglomerate Hyundai is going to set up a EV plant, electric vehicle plant, production plant here in Singapore. So Singapore's going to produce cars once again, but electric vehicles, because of the supply chain, Singapore fits very well into it with the electronics production base here, and also we have the ports that are going to export. So with Malaysia, you know, they're still struggling now with the second wave, so it's going to another lockdown even during this Chinese New Year. People are not allowed to travel interstate, so which will indeed sort of hamper consumption. So again, what we said, it's imperative to really control the virus situation. Its exposure to electronics, commodities, nonetheless, is a boost. But for Thailand, because definitely hard hit because of the tourism sector. So with the longer term plans to develop the Eastern Economic Corridor, that is also a positive. But once again, you really need the region for investment flows, travel flows to open up. For Indonesia, the largest economy in Southeast in ASEAN, the virus situation is still the most important aspect. They need to get that under control and then to roll out the vaccination rate. But the good news, the good part is that at least last year, the government really managed to push through some reforms on the labor market. So, and this is really essential in order to improve Indonesia's competitiveness, attract FDI, you know, ease FDI regulation, etc. So there are different positive things that will go on. So a crisis, of course, will always cause changes to come. So hopefully this will sort of push it along even further. You know, with Philippines, once again, it's the virus that they need to get on top of. You know, remittances were slow. Even with the huge package that went through, Philippines contracted the most last year, 9.5%. Now with Vietnam, initially it was really the country that did really, really well at the beginning. It didn't go into any hard lockdown even up to now. So the economy should recover, stay open. Now with the latest resurgence, it will hamper growth a little, but it will continue to benefit from the relocation of supply chains. So let me go on. Just very quickly, I'll run through some of these next few slides, and then we'll finish off with the US-China relationship. So the fiscal response I mentioned earlier on with Singapore, 20%. With the exchange rate, you know, the black line here, the yellow line here shows the percent change in the currency versus the US dollar 2020. The black line is the forecast for this year. So with last year, the euro gained around 9%. So last year, 2020, was really a world of dollar weakness. So most Asian currencies managed to gain because of weaker dollar. Your North Asian currencies, Taiwan, Korea, because of electronics. But it belies the point that in March last year, the likes of Indian rupee, the Indonesian rupiah collapsed almost 20%. And it was almost on the brink of another financial or currency crisis. But thanks to the Fed, everything calmed down. It calmed down. So it's yet another reminder, everything seems hunky-dory right now, but once the Fed takes away the punch bowl, the liquidity, there will be ructions, there will be disturbances, there will be disturbances in the force. There will be disturbances across all of emerging markets. So even though we're going through a crisis now here in ASEAN, it is also the time to push through reforms to really solidify the fundamentals. Because like it or not, another storm will come. Winter will come. The Fed will have to take away the punch bowl. Okay, so I'll just leave that on the currency. So exports, okay, we won't go through it. I think no central bank rates. So let me just go on. Okay, maybe ASEP we can talk about during the panel discussion. I'll let the others talk because I don't have any more time to talk. Okay, let's finish off then with the US-China relationship. Okay, I have about 10 minutes and then we'll be done. Okay, the best way to look at it, let's take a step back and really look at it in 3 buckets: the China's point of view, the US's point of view, and the rest of the world. You know, when Biden got elected, the Chinese foreign minister basically made this comment that a window of hope has opened up, right? It's not necessarily that things are going to go back to normal, thank goodness, but it's hope. So here's a picture of Mr. Biden, a young Biden, as VP, Mr. President Xi. So number one, from China's point of view, realize President Xi is different to his predecessor. Unlike Deng Xiaoping, who was the president when the economy opened up, of bide your time, hide your strength. It's no longer that kind of view. Under President Xi, it's almost a thinking is, our time has come. We are rising power, and US is a declining power in really all aspects: economics, military, technology, etc. Number two, China will also be very astute to know that to differentiate between the noise and the rhetoric and what has really changed in the US. They're also well aware of the US political system, but they may enter into a period of strategic silence, right? They're in it for the long haul. They know that Biden's hands are tied in Congress. Okay, so they want to differentiate between the politics and the pragmatic sort of side of things. But the key question they really want to have their ear to is really what is the US stance on the South China Sea, the East China Sea, on Taiwan, human rights, Hong Kong. What about a bilateral trade deal? Will there be a phase 2? Will the tariffs come off, or will they go up? You know, what about the talk about delisting the Chinese firms listed in the US? So all this they want to be aware of. Number three, they want to know what is the US's policy on the One China policy, right, on Taiwan, especially after the landmines that the previous administration sort of left behind. Number four, they will realize the US-China relationship is on a downward trajectory, right? The US, like it or not, no matter who's in power, they're a more adversarial US. They're out for containment and no longer engagement. Okay, so in it for the long haul, China will have no qualms and also exercising its economic leverage and power over its major trading partners. Then number six, China is also embarked on this thing called the dual circulation strategy. Now, what is that all about? I'll just show you in terms of a picture. It's basically wants to rebalance China away from international circulation towards domestic circulation. So away from internalization towards what the economists will call autarky, right? But it's autarky-like because they're not going to abandon the international export engine altogether. But what it is, the dual circulation strategy is a hedging strategy, right? Because of a more adversarial US, they want to make the domestic economy a bit more resilient. It's good on paper, but it's really the same thing as what they have been trying to do for many years now, which is what? Which is trying to rebalance the economy to be less lopsided, not so dependent on exports. And it all came to a fore with the tariffs and the trade war, etc. So in order to do that, you really need to rebalance the economy, increase the income opportunity to households for them to spend, because in order for consumers to spend, they need to be richer. Okay, so just stop there. Three key areas we're trying to really look into is really the technology, the energy, the food side. Okay, I just had this slide about the timeline. Okay, so 2021 is the 100th anniversary of the founding of the CCP, right? So great achievement. But then they have a 5-year plan, which they're going to unveil later this year in March. Then they have a 15-year plan, which is to make China a moderately prosperous society. Then they have a longer-term, 30-year plan, take it out to 2049, which is to make China a great power. But the next key date to watch is 2022 March, which is what? Which is the end of the 10th year of President Xi's tenure. So will he continue and be president, continue to be president, Most likely. So if you take by the end of his term, by 2050, it'll probably be 82, something like that. Okay, so let's move on. The US aside, okay, I'll just rush through this a quick short 3 minutes, and then I'll hand it back to Bettina. The US aside, okay, the evil empire strikes back. No, the evil empire was a name for somebody else earlier on, okay. US aside, make no qualms about it. Biden has his hands full domestically. His first and foremost priority is not to tackle China or even any international issue. It really is to control the pandemic, ensure the recovery, right? And then longer out, spend on R&D, infrastructure, etc. Unity is the message from the inauguration speech. 11 times he mentioned in one form or another is really to unite the country. Otherwise, you won't have a United States of America. You're going to have a divided States of America. Number two, the US needs a national China strategy. Number three, it needs a coherent foreign strategy, not just a China strategy. That's why one of the legacies of the Trump administration is this phrase, the Indo-Pacific, to bring in India as well. Okay, number four, they'll have to also come to terms. What are they going to deal with China's strategy towards its allies, Australia, etc. But the bottom line is that they realize they already label China as a strategic competitor, right? So the consensus in Washington has definitely changed. It's no longer about making China rich, they become more like us. They realize China will never become like them, right? So now they realize it's about strategic competition. Okay, now here's a question. Will Biden take the US back into CPTPP? Your answer, unlikely. There's probably very little appetite at this stage, okay? So you will probably have to see a more judicious approach. That's what Tony Blinken said. Again, here's some pictures. Here it's an A-team that Biden assembled to tackle the China issue. You know this fellow? The personal advisor to Hillary Clinton earlier on, okay, Jack Sullivan. Then here's General Lloyd Austin. The general, people say doesn't have much Asia Pacific experience. Well, enter Kurt Campbell, was a fellow who coined the phrase the pivot to Asia. Here's Catherine Tai, Taiwanese heritage. She is a new USTR. And then here you have young Biden, Obama, and here's Tony Blinken. So these guys have been around the administration for some time. That's that's the China's view, but also there are areas for competition, you know, in such as in climate change, in tackling future pandemics. You know, both sides need to know where the red lines are that both sides cannot cross. Now, where does Hamlet come in? You know, both sides will realize that they are in a strategic competition. Certain areas we cannot cross, others we can cooperate. Then there's a big sort of area here where let the best man win. And this is where the Hamlet picture comes in. So the only way to find the best actor would be to let everybody play Hamlet and let the best man win. Let the best innovation, the best technology win. And that's the way to avoid escalation, confrontation, conflict, and crisis. So let me finish up with these traffic lights. Okay. Red line, confrontation. Both sides will have to draw the red line. You must not cross over this side. Then there's areas of competition for both sides for the benefit of everybody. Tackling climate change, tackling global pandemics, because COVID will not be the last, right? Then there's a big area of competition where both sides can compete for everybody's benefit. Thank you very much for listening. Let me hand it back over to Bettina. Thank you.
Thank you very much, Charlie, for this most powerful and captivating outlook, which is taking us to the perfect point to start off with our panel discussion. So it is our sincere pleasure to have David Bachmann with us today, who will kindly moderate and guide our following panel discussion. David is the Austrian Trade Commissioner to Singapore for Advantage Austria. He already set sails early for diplomatic services, and in the meantime falls back on more than 24 years of experience in Austria, Sweden, Portugal, Mexico, and Libya. In 2018, his path led him to Singapore, David did not only gather considerable expertise in international affairs, but also acquired an exceptional range of language skills. He is fluent in German, Spanish, English, Portuguese, French, and Swedish, with an additional basic knowledge of Arabic. So David, we are more than lucky to have you on board today, and it is my sincerest pleasure and my joy to now hand the virtual baton over to you.
Thank you, Bettina, very much for this nice introduction. Well, coming from a small landlocked country with a funny language, we have to learn many languages at our early ages already. Let me briefly introduce the other panelists that we're having today. We'll be having Justyna Lasik, head of the Economic and Trade section at the EU Delegation in Singapore. Justyna has been 13 years already with DG Trade in Brussels, a real expert on FTAs, was also part of the negotiation team of the Brexit negotiations, and has come to, I would say, more positive waters to Singapore 3/4 of a year ago last summer. Then we have Jürgen Bauer. He's a German attorney at law, head of the ASEAN region at Rödl and Partner. And he's been living in Asia since 20 years, is now living in Bangkok and heading, as said already, the ASEAN region, and traveling a lot forth and back. And the ASEAN region also includes Australia and New Zealand, where we might have a short word on that. We haven't heard about that today, right? Then we have Dr. Thilo Ketterer. He's the East Asia and China expert at Rödl and Partner. From 2004 to 2012, he was the head of Shanghai and Peking offices, concentrates now on China, Taiwan, Hong Kong, South Korea, and Japan, and is at the moment in Shanghai, but as I understand, traveling forth and back from Germany to Shanghai. Last but not least, Martin Wörlein, also German attorney at law with additional training in the US, is heading the India and South Asia region team, has been living in Delhi for 6 years now, and also traveling a lot between Nuremberg, headquarters of Rödl and Partner, and India. So let me maybe start with Charlie, as you were the keynote speaker. And one question which really comes out of your presentation is, I mean, you really demonstrated very strongly that Asia will come out, or is coming out strongly, or strongest of all the superpowers of the COVID crisis. Now, the question is, can Asia generate its own demand? Because I mean, as you have said, it will be more regionalization and more looking inwards, not so much the globalization decades that we had the last 20, 30 years. So will there be enough thrive for it? Charlie, give you the floor.
Sure, thank you, David. Well, that's always a good sort of aim for the region to strive towards, to be sort of more independent and less dependent on the developed sort of markets. But the fact is that if you look in terms of income, Asia is still in the sort of lower income sort of category. So you still have to sort of export to the rest of the world, to sort of grow your income, grow your way out here. So I think I had one of the charts in the presentation where you looked at GDP per capita. Apart from Singapore, 58,000, everybody else was more or less about 4,000 or below. Still sort of mid income sort of level. So number one is the population is here. ASEAN, big chunk of the world's population, but it just doesn't have really the income yet to really generate that sort of self-sustaining growth. I guess another thing you could say is in terms of the infrastructure. There's still a lot more that could go into infrastructure spending, and it's not only just the ports and the airports, but also health infrastructure. And we've sort of seen a stark example of that with the health crisis when COVID hit, and those kind of economies with sort of better public health infrastructure were able to sort of withstand the crisis a bit better. So you're not sort of quite there yet. You're still moving towards. And ultimately, if you say what would drive an economy, it's going to be productivity. The World Bank in the early 1990s, before the Asian financial crisis in 1997, had this report out saying the Asian miracle. How did Asia manage to do so well? And there's a famous one, Paul Krugman, who always pushed back on that and said Asia grew not by inspiration, but purely by perspiration. It's just catch-up growth, right? So now that it's caught up, it's unlikely to sort of grow at that pace. So ultimately, we still need innovation, productivity to be the underlying driver of growth for Asia. So at this stage, we're probably not quite there as yet, David, I would say. You're still very dependent on growth in China, growth in the US, and of course from Eurozone as well. Thank you.
Thank you, Charlie. Yeah, we'd like to call Justyna also following this conversation. I mean, Europe, the EU, the apostle of free trade during the last decades, having formed the free trade agreement with Singapore, Vietnam, Japan, many others in preparation. How do you feel like seeing that it becomes more regional? Does this mean Europe is losing it, or are we winning it? What's our position in Asia?
Hey, thank you very much for having me. So if I was to judge the role of EU in the region based on the presentation of Charlie, I would say it's very little because it was not mentioned much. I don't think the role of Europe or in the region is that weak. Actually, if you look, you mentioned already some free trade agreements that we completed. Compared to 8 years ago and now, we have 4 free trade agreements in place, which cover indeed Japan, South Korea, Singapore, and Vietnam. And at the end of last year, we have also completed a comprehensive investment agreement with China. We will see how long it will take us to ratify it, but obviously we are present in Asia, and we want to be present even more. However, we look at it from a point of view of creating a level playing field for EU businesses. And that's why, for example, when you look at the China agreement, we didn't engage in a full free trade agreement, but just focus on one aspect, which is investment. Obviously, I agree with the fact that trade becomes more regional, and especially you could see it in the last months during the pandemic. There's one example, which probably many of you read about the transportation cost of containers coming from China to Europe, which increased in price, I think, fourfold. This was due to the fact that at the beginning of the pandemic, the consignments or the demand was decreasing, and then when it picked up, there were no free containers there. So in terms of impact of EU on the region, I think it's not becoming less important. Actually, EU sees the importance of the region, and that's why it engages with, especially with China. Thank you.
Mm-hmm. Thank you, Justyna. Just a reminder for all the participants of our webinar, please feel free to ask questions via the chat function, and I will take them up and forward them to the person I think would be most suitable to answer it, or you can also feel free to take them up.
Sorry, may I just add one comment?
Yes.
I forgot to actually make one more comment. So actually I wanted to refer to RCEP and TTP, which were CTPP, which were mentioned. Obviously, if you look at those agreements, especially the recently announced RCEP, the devil is in the details. So the agreement is very comprehensive when you look at when one looks at how many members it has. But when you look at the content of it and compare it to the EU agreements that are in place, one could question whether this agreement is so ambitious. In terms of tariff coverage, it's very complicated to understand what it actually does. In terms of rules of origin as well. And if you look at the regulatory aspects of it,
a lot will depend on how this agreement is implemented. So I think this is a great attempt to focus more on regional integration in terms of trade, but it's not all that matters. It's not only political statements, it also matters how this agreement is implemented. And when you look at EU agreements, I can make examples of two, Japan and South Korea. If you look at scope in terms of tariff coverage and also at regulatory aspects, those agreements, which are in place for quite some time, especially the one with Korea, delivered in terms of market access and also created level playing field to some extent. Let's see what happens with Vietnam. This is a new agreement which is in place only a couple of months. So, okay, let me finish there. Thank you.
Thank you. Yeah, Thilo, I would like to have your point of view also on that, especially now when it comes EU-China and the investment agreement that has just been concluded recently. And the question is, I mean, China sees this as being very positive. Now in the EU, there has been quite some negative remarks. What's your point of view? Is it good for Europe or bad?
Thank you, David, for asking me. Actually, this is not so easy to answer this question. You know, if you go to the media in China, the general recognition of this investment agreement is very positive. Everybody is full of praise because they consider with this EU-China investment agreement, it's already a starting bondage between the two regions, between EU as membership and China as a country. We know the people in Europe are much more critical to this agreement. And we also need to keep in mind, this agreement is not yet enforced, not yet in place. So it still needs to be approved by the EU Parliament before it comes into place. China is somehow celebrating it a little bit like a free trade agreement. We know it is no free trade agreement. It is just something like an agreement between the governments of the EU and China for market access. Like Justyna said earlier, it's a matter of level playing fields, that we try on a state-to-state level to arrange certain preconditions, a framework, how to operate. And here, especially the questions are how China supports the state-owned enterprises. How are the subsidies transparent or not transparent given to the Chinese companies? Are there still some necessity to transfer know-how to China if you want to be successful in China? And all this on a state level. This is currently discussed and agreed by China. We need to see how it finally will be implemented. And we also need to find out if the EU Parliament is accepting it or not, or if there will be some fine-tuning, because currently we have a draft. Okay, wonderful, it's agreed on a high level, but it's still a draft, it's not yet agreed on. So we need to see how it's finally will be brought into life. And then we have to think also for what kind of industry it will be relevant. Is it more relevant for the big players, for the big companies, or also for the small, medium-sized enterprises? You know, we, Rödl and Partner, we represent a lot of German Mittelstand, so SMEs. And the question is how the SMEs can profit out of it. If you look a little bit on the current situation also in China, certain requirements like the minimum shareholdership, the necessity for going for joint ventures in certain industries are already implemented in China in laws, end of December, already in 2020, also for the new foreign investment law. Also some rules are already, China is already starting to implement it even before the EU directly agreed to it. So I'm positive. I hope this can start a wave of investment in both directions, from the world, China, from Europe to China, but also from China to Europe. You know, we're already supporting also quite some Chinese company investing abroad, China outbound. We have a team of Rödl and Partner in Stuttgart office with registered Chinese lawyers, and we help them already to to support Chinese companies all over Europe and also including the Americas. So we hope the best for the investment agreement. Let's hope everybody will agree to it, and then we see hopefully a new dimension of future business. And then also, I think the whole Asian region can benefit out of it, because it's on one hand for sure a EU-China deal, but also China is part of the RCEP, and so maybe it can really also boost the whole Asian region, not only China-EU relationship.
Thank you. Let me go to Jürgen. I mean, you're having a very interesting region, because also, as we saw from Charlie, it has everything in, right? I mean, like from Singapore on the one hand, going to Myanmar on the other side, and still altogether everybody says ASEAN, that's the boom region of the next few years, and that's where the biggest growth at the moment is taking place. But also, as we saw from the presentation of Charlie, is that it depends very much how well you came out or are coming out of COVID. And as we've seen from China, also Vietnam, those countries tackling well the pandemic are doing well also economically. So now my question is how you see this in the region, because we've obviously, I mean, I think most of you know the EIU prediction that was released 10 days ago, where they showed on the timeline which country will have herd immunity at what stage. And there was Hong Kong, Singapore, and was it Japan? The only three having herd immunity 2021, and then, you know, it went on with Thailand, other East Asian nations. On the end of the spectrum, we had only 2025 Indonesia and Myanmar. So would this mean, Jürgen, that we will have a separation within ASEAN of the ones who tackled well the crisis and others not so well? Would it be a like in Europe, the northern and southern division?
I think actually we already have a separation to a certain extent, because as you correctly said, actually, I mean, this region, many people often think, okay, this is quite similar to let's say economic area like the EU or other big trade areas, but when we look on it in detail, all countries are so extremely different. As you said, I mean, from Singapore, where you have a quite stable political situation and also economy, then you have like really developing countries on a very low scale still, like Myanmar or like Laos and Cambodia, for example. So coming from that, also taking all these cultural differences into account from where they are coming, naturally everyone is in an extremely different stage of development. So what has COVID done to all of this? I fully agree with Charlie, of course, that the countries who are effectively able to encounter all this threat easily, or let's say on a big scale, they will have an advantage, that's for sure. On the other hand, we see that overall speaking, COVID just accelerated many trends we've seen already over the past. And speaking of many trends, is that this region, like ASEAN, always had areas where it's of course better to manufacture something with higher technology because you have the resources, you have the supply chain and everything. Others are more in labor intensive. Other areas like the Philippines is more the BPO sector. It's like a service sector for other countries. So all we see a big diversification, and for us as, let's say, advisors, when we speak with clients, when we see companies investing in these areas, it becomes very clear that everyone has to look very, very closely on where they go, how they do things now, and COVID definitely accelerated this a lot. But overall speaking, coming back to one of your questions, I personally think the ASEAN region will certainly be one of the major growing markets, if you can call a collection of countries one market. like that. And not only, as Charlie correctly said, that many foreign relationships are basically a key player into that ASEAN countries export. But what I also see is that more and more, of course, the middle class is growing in all of these countries, which is basically driving the domestic consumption, the inter-ASEAN activities, and especially also all the trade activities between China and ASEAN countries individually. So this will be a big factor as well in the future, I think.
If I could add, David, just onto what Jürgen has just said, you know, I was just reading the papers this morning with Klaus Schwab, the founder of WEF, the World Economic Forum. He made this comment that the Asia Pacific region, you know, they asked him why are they holding the WEF forum here in Singapore in August. He said the Asia Pacific region will be the largest overtaking the developed markets now this year, 2021, in terms of PPP terms. But I think come August, with the World Economic Forum coming here, it's also a good platform, you know, for the whole of ASEAN, not really just for Singapore, but to really broadcast to the rest of the world that we are a region here, and each player will play its part, Jürgen, as you mentioned. Now, Singapore has its role as an entreport hub, as a financial center, services, etc. But we cannot exist on our own. We need the whole region to also play ball, to come in together. You have the big population, 250 million in Indonesia, potential for manufacturing to really start up. I think of an example like in India. In India, how they said it will be the second largest exporter of PPE equipment in last year, whereas before March last year, India did not produce even one PPE, but because of the crisis, they really got together and managed to produce so much. So that is really the potential that ASEAN could also strive to, if we can all get its act together. And we all say everyone has its role to play. Thank you.
David, I'm sorry, you're muted. We can't hear you.
Sorry, thank you. Yeah, Charlie, thank you. I mean, you mentioned also India, and that's indeed a very interesting country, and also South Asia. And I'm coming to Martin with that question because, yeah, I mean, also can tell from my own experience. I mean, I'm also steering activities here for our region with Advantage Austria, and took over also 1 year ago India. I mean, we have own staff there, own commercial counselor, but still trying to coordinate. Sooner or later you find out, well, that's something by its own. And the question is now really also on the, you mentioned, Charlie, about the US and India. Can it be seen, Martin, that India is directing itself more to the US, and US is saying, okay, let's forget about China, let's go to India, the next superpower, and hope that in 20 years the strategy will be they have overtaken China?
Thank you, David, for the question. And India has, when I also look at the last few minutes of discussion, India is always a little bit the elephant in the room. It's a very large, obviously a huge unit as a country, a large population, and it has its own dynamic. And also, in my view, has seen itself always as having its own dynamic, and also stepping out of the RCEP process and preferring to stay on its own feet at this stage. That's a characteristic we've seen. What we've seen also is India has always been, the perspectives of India and the potential has always been discussed as a future-looking perspective. It has always been a country with a great future. The question always was the presence and the challenges and the opportunities had to be looked for carefully there. But what we've seen indeed is that India has also in the crisis shown a remarkable resilience. The overall economic data may not always reflect this. India, of course, started into the crisis also with a very drastic social differences, with very drastic challenges in infrastructure. And what we've seen on the ground, we, as Theo also said, and we advise medium-sized organizations who are doing actively business there, and we've seen a remarkable ingenuity, creativity, and the dynamics in coping with the crisis. And also outside the classic BPO sectors and service sectors, but also in the hardcore manufacturing, where India sees its great future and has the most unutilized potential. Now, coming to the US-India relation, when we see it, we are by our nature slightly German-speaking countries centered, so Europe centered. It's Europe to Asia. The link for our clients between the two regions is not as strong for our clients. And the question of US-India relations obviously are somewhere there. We have the vice president of Indian origin that interestingly is not reflected greatly in India, even though normally anyone of Indian origin making it on the world stage, and we have so many examples, is a great sense of pride. So it's being noticed, but it's not seen as a deciding factor.
I guess with Obama, right? He was kind of celebrated in all over Africa actually at that time.
It's yes, absolutely, and obviously we do these links are very strongly looked at. We've seen, by the way, a strong bonding between Mr. Trump and Mr. Modi, the two very Twitter-minded heads of state, and that has of course now moved away. They have to find a new relation. But what I find, what we see is here really, when I compare it to Europe, I think it's one of the India-Europe relation is what we see as very strong and has huge potential and is heavily underutilized. And I know that the European Union representative here is not involved in that directly and is not to blame for this. And I think there have been a start of a free trade agreement between India and the EU, starting negotiations a long time ago. And this is an eternal subject of sort of waiting and small progress steps. Now it's, I think, again more on a standstill for a number of reasons. I also don't think India is a very easy party to negotiate with for those things. I see it heavily underutilized as potential and clearly as a force in the region which can be relied upon aside the other big entity being China. It's clearly a strong force to be relied upon. We see it for companies clearly, and we may come to this also later, that how companies utilize this very heavily and strongly and consistently over. I've myself been involved with the India-Europe business for 15 years. I've seen it grow so dynamically and strongly, and is even now during those challenging times, I've seen it grow. So, and that's without the backup of a formalized trade agreement. So imagining what can be done if this gets a further institutional push is very, very fascinating. India will remain a stable force. It's a large democracy with all its challenges in decision-making times, in developing and ideas. It's a federalist system, so rolling out things is not always done via a central top-down approach. So it has all these challenges, which for a developing region, country in this scale, make it also sometimes definitely slower to reform. But we've heard in Charlie's presentation there are good reforms going on already, and that's a steady pace, not as fast as we always like, but it's steady. And now we hope that maybe the EU angle will add to it to support further the businesses which we see anyway developing in a very positive way for companies from Europe.
Thank you, Martin. Let me take up some questions. We got quite some questions from the audience. I combined two together. This might be maybe for Thilo, but also all the others, please feel free to share some thoughts on that. So one question was on the digital currency. I guess everybody's in Bitcoin fever now. So the question was the digital yuan. Does this, how will this affect global competition? How will this affect China? And actually, this can be also seen together with another question about digitalization. Because digitalization, the question was, does this mean that it's a concentration of power, digitalization in China, especially? Because technological innovations means technology innovations means also you need privacy rights, and also this together with the digitalization, does this mean a more concentration of power? And one thought only, or one additional comment also about digital yuan. I mean, you saw where it led to when you looked at Alibaba during the last few weeks or months, when Jack Ma wanted to introduce or kind of do the IPO of ANS, and the night before it was cancelled. So I guess it also has to do a little bit like that. If you raise out your head too much and say you're going to fight the system, you're kind of parked away a bit. I don't know, Thilo, you want to start with that, with the two questions combined, digital currency and concentration of power?
Thank you, David. This is not so easy to answer, actually. So let's start with digital currency. I already participated 3 years ago, a very interesting discussion with the head of the Central Bank of Sweden, when they discussed about introducing a digital currency. And the main problem for digital currency is that normally you need to have a claim against a central bank, against the country. For example, if you now compare the Bitcoin and discussion we had the last 2 days with Elon Musk and his investment in Bitcoins, it raises something which is totally virtual. And now China started in South China, in Shenzhen, this trial with a digital yuan, where the currency itself has the same value and the same status as the paper money here. And I think a very important step for introducing a digital currency is that it's backed up by the federal state banks of the countries, that you have, as the owner of a digital yuan, a claim against the country and not a claim against some other kind of institutions. And
do you think that Jack Ma would have introduced with ANS a bit of a counter system, saying we're going to bring to fall the central system, central financial system, and build up our own currency
not
system?
bring to fall, but maybe start into a competition with it. And I think also, but here most likely Charlie from a banking background has more information or more professional thoughts on this. But my non-professional thought is you need to have a clear structure of the currency. You need, if you have something like a secondary market with virtual currencies, then it cannot be controlled anymore by certain countries. And we know for China it's essential also to control the in and outflow of foreign currency into the market. So I think it's logical that China introduces a digital currency which is controlled by the People's Bank of China, and not to accept any other kind of virtual currencies which could not be as good controlled as it is with a currency under the People's Bank of China, the Central Bank of China. But maybe Charlie, you can add some.
Charlie, you want to add something to that?
Not really a lot more professional advice, but in a sense, Thilo, you can say with the Alipay and the WeChat Pay in China, right? I'm sure Thilo probably goes out in China, you don't carry your wallet at all. You just have your handphone, correct? You can basically do everything on your handphone.
Of course, but there's one big difference. With my Alipay, I have access to my bank account with the Bank of China, which is a private bank.
Yes.
I have with the Alipay I have not a claim against the People's Bank of China, against the country itself. I only have a claim against a private institution called, in my case, Bank of China.
Correct.
And I think this is a big difference between digital currency and using digital payments like Alipay or WeChat Pay.
Correct. So in the sense that the whole idea of digital currency is already sort of in place in China, albeit via the Alipay, the WeChat Pay, etc.
Fully agree.
If company wanted to introduce a digital yuan, then the guy that's going to back up that currency is no longer a private enterprise, Alibaba, whatever, is going to be PBOC. So maybe there is a bit more backing. But beyond that, yeah, you basically put your trust in the institution, in the PBOC or in the government, right, to really stay in place. So it is true, like with all these other digital currencies, there is no backing, as opposed to a fiat currency. There is also no backing. That's why maybe there is so advocates for us to get away from fiat currency system towards some sort of gold standard. At least there is some sort of backing behind these currencies. But it is like a trend possible. But innovation, technological innovation, it's going to continue. It's something that the momentum is there. You probably cannot stop it or reverse it. So it's more, instead of thinking whether it's going to be the currency of exchange or medium of exchange in the future, it's really how do we deal with it. And that's where regulation may also need to come in, right? And then coordination internationally, because every country is also trying to come up with their own. Final comment is, I guess the push maybe from China or everyone else is really to get away from the centrality of the dollar as the dominant currency, the reserve currency in the world. With the reserve currency comes the exorbitant privilege. With if the Fed prints money, like what we've seen since 2008, what is that called? That is just called reflation, right? Reflationary policy, keeping the grease going, keeping the economy going. But if you and I in Rödl will print money, and then it will be called counterfeit, and you can get to jail for that. Okay. Anyway, so I'll pass it back to you, David.
Thank you, Charlie. Let me add, we have like 12 minutes left. One very interesting question from the panel. So somebody from the audience writes, being an optimist, but considering the fact that vaccines are not being distributed in an equitable manner, we had that, COVID-19 will have many possibilities to mutate and spread in new shapes and forms. This is a persistent global health crisis. Where does the optimism come from in the presentation by Commerzbank? So I guess, just saying one sentence on that, living in Asia, you have more of a, well, what the government in Singapore tells you, the new normal feeling like that's it. If you want to go on a cruise, you go to a cruise to nowhere, or you spend the day at the beach on Sentosa. But otherwise, that's what kind of feels normal. And I think we're not in the middle of, at least Charlie, like you also, here in Singapore, we don't have this feeling of the pandemic is taking overhand. So are we in Asia too optimistic about what's happening in the future?
No, not at all. I think. Thank you for the question. I think it's a very valid sort of issue to raise. Sure. If you look at in terms of the numbers, statistics, Jürgen will tell you, can basically tell any story that you want, because you got a big drop last year by default. If the economy opens up, you're gonna get a rebound. But is that synchronized expansion? Because like it or not, even if we grow at 5% this year, global growth, you're still gonna be below pre-pandemic levels. Okay, let's look beyond the statistics in terms of the actual reality. Sure, there is that tone of needing to be cautious, right, because of the vaccine rollout. And I can understand your skepticism, because like what we always say, we live in a very, very sort of interconnected world, that no country is safe now until everybody is safe. And for what David Rödl quoted earlier on from the EIU research, is that even here within ASEAN, Asia, Singapore will probably get 70–80% vaccination rate by the end of the year. But a country like Indonesia, you may have to wait until 2023, 24, maybe even longer, right? So hence, definitely life will not be back to pre-COVID level anytime soon. But the good news is definitely is the vaccine. Like it or not, one of the wins, one of the pluses of the Trump administration is really Operation Warp Speed. They managed to get a vaccine out within a year, within 9 months. Now something came out, and Johnson & Johnson has already come up with a third one. The key question, as you rightly say, is really the equitable distribution of the vaccine. And this is where, what we said earlier on, for China and for the US, is entering into a decade of strategic competition. But there are areas where you must cooperate, which is what? Climate change and vaccine pandemic management. And part and parcel of the pandemic management is the whole COVAX. So what were the two things that Biden did when he became president? Take the US back into the Paris Accord and rejoin WHO, right? So one of the people say obscene decision during the administration's period was really to take the US out of WHO in the midst of a global pandemic. So this is where cooperation will come in. With COVAX, maybe it's a platform to help distribute the vaccine to the emerging world. Because like it or not, if the developer continues to grow, emerging markets continues to submerge, it won't be good at all for really the global growth in the long run. Yeah, thanks.
Thank you, Charlie. Let me give also something back to the audience. So we have one question to the audience, which would be, which is the region that you think will be the one most benefiting, or where you would be putting your business in the future? So as I understand, Bettina will help me putting the poll on, right?
Yes, of course, it would be my pleasure. So I will just launch the poll, asking the audience to kindly come back with your answers. So here we go with the polling.
Where would you see the most business potential in the next few years? ASEAN, East Asia, China, South Asia, India, or a different country?
So I'll give it a couple of moments for everybody to take a chance on the answer and close the poll in a couple of seconds. Yes, thank you very much. There have been a lot of answers coming in, so I'll be closing the poll now.
Okay. Well, I got a sneak preview. Yeah. Shall we show it, Bettina, or? Yeah. Okay. So, East Asia, China, interesting. Yeah. 50%.
Please don't hesitate to contact me.
Sorry, what do you say, Thilo?
Don't hesitate to contact me. I'm available for you.
Okay. Let me ask one last question to Justyna. Because as we're having you as a trade expert, a trade agreement expert here also, and knowing that the EU has been heavily engaged with the resources in the Brexit talks, it was kind of really like a creamy watching what's up today. Is it COVID or is it Brexit? And I guess it must have been hell of work in Brussels to get the deal or the no deal, or however you call it, fixed towards the end of the year. And I'd be curious to know, with the UK having such a big influence in the region, what does Brexit mean for the region? And also looking at the figures of the last few days, it's like Charlie also said, the Operation Warp Speed, the fact that the US is now really speeding ahead is not only due to the Biden administration. There must have been some work before also, and the same applies now to the UK, where we see, it can't come out of nowhere that all of a sudden over 20% of the UK has been vaccinated at least once already. So what does this mean? Will the UK be a major player here and be, as they like to see themselves in Norway or Switzerland of the new area? Yeah, Justyna, I leave this last question to you.
Okay, thank you very much. If you look at the economic impact of Brexit, we will know it later because, as you know, although UK left the EU last year, it left only on 1st of January of this year, the EU customs union and single market. So obviously, for the moment, we could only see the fallout on the EU-UK border. And obviously, the whole discussion about the vaccines did not help. It already showed how far apart we might become, actually. In terms of impact on the region, obviously, UK is becoming very active here. And if you look what happened even before UK left the EU, UK managed to duplicate the existing EU FTAs in the region. So before January of this year, it concluded agreements with the 4 partners where we had already agreements. So South Korea, Japan, Vietnam, and Singapore. And those agreements are already in place. They were actually copy-paste on EU agreements. And basically, they stipulated exactly the same as the EU agreement. However, there will be an impact on supply chains and the integrated supply chains because before Brexit, just-in-time delivery was possible. There were no control at the border, no checks, no paperwork. And now the situation will change drastically. So obviously, from practical point of view, EU companies will have to investigate their supply chains and check whether they are not overexposed to UK. At the same time, UK, in terms of leverage and being a hub for access to the EU, will lose that advantage. But in the region, definitely will be free to do what it wishes, as it is no longer subject to EU trade policy. And you could see example of this already last week when UK announced its intention to accede to CPTPP. Obviously, this is just a letter that has been sent, so let's see whether it's accepted. We assume yes, because this request has been supported by, for example, Singapore. Additionally, UK is also becoming very active in other areas, especially in digital field, where it also announced it will launch negotiations of a digital economy agreement with Singapore. And the negotiations are also supposed to start this year. The big question mark for me is what happens with China, because EU, as we discussed, completed the investment agreement, and obviously one cannot have policy towards Asia if it doesn't include China. So it will be very interesting to see what exactly UK will do in terms of China, and basically how UK behaves in terms of also the present discussion on vaccines. Because there was a big, probably you couldn't overlook it, but 2 weeks ago, EU introduced export authorization and transparency measure towards vaccines, which basically were in direct response to AstraZeneca announcement that it will not deliver the quantities that were pre-agreed with the EU. And basically majority of the vaccines that were pre-produced were sent to the UK. So obviously, at the same time, UK, although we didn't announce it, just like US, can limit exports of vaccines. And the question will be how you can ensure, here I refer to what Charlie said, how you can ensure equitable division of vaccines if certain countries actually don't export them or don't allow export, and when production capacities are really limited to certain countries. And let's look at Singapore. Singapore has no production capacity. It's a developed country, and you could say that a situation with regard to vaccines, with regard to COVID is under control. But at the same time, Singapore relies 100% on imports. So if even a developed country can be faced with shortages of vaccines, what happens with developing countries? So you see, yes, I share the point of view of Charlie about US. That US is focusing on basically having control over domestic situation, also in ensuring that vaccinations continue. But what we have to also take into account is that this might not be a one-off operation. We might be vaccinating now, but no one knows what happened in 6 months. Maybe the immunity will be so low, we will have to start already a second phase of vaccinations. So you see, this is quite a complex issue, and obviously a lot has to be done. In terms of EU and UK, we obviously would like to be in a good relationship because you cannot cross out 40 years of cooperation and being a member to the same organization. Obviously, in terms of trade, UK was very active and was really pro-trade while it was in the EU, so it will definitely not change while UK is outside. And when it comes to the challenges that are ahead of us, especially the vaccines, yes, there has to be a real discussion about how to divide the burden and also how to provide the resources. If you look at the situation in Europe now, you can also maybe understand that it's difficult if you have to export millions of vaccines elsewhere, if you have basically half of population under lockdown and people dying at rates that are not seen elsewhere. So it's not, I'm not trying to say that it's as bad as in some developing countries, but if even developed countries face such challenges, this is an issue that will require a lot of joint effort and basically working beyond any political divide. So there will be cooperation needed between China, US, EU and other players, hopefully in the international forum. Okay, thank you very much.
Yeah, now you. Thank you, Justyna. Well, thank you, all of you, for participating as speakers and also the audience as listeners to this conference webinar organized by Rödl and Partner. Thank you for Rödl and Partner for choosing me as your moderator. I feel very honored. Yeah, I guess I give back to you, Bettina, right? Been an angel helping organizing all the, from a technical point of view. And yeah, I think we ended just in time.
Thank you very much, David. Thank you very much, all of you, for participating in today's panel discussion. Thank you especially for our extra guest speakers and for all the efforts you took to be able to join us today. It was really very much appreciated, and we had a wonderful audience handing in many questions, and I'm glad we could attend to hopefully all of these. Should any questions have been left unattended due to the time issues now, or you come up with questions later on, please do not hesitate to drop me an email and I will be happy to liaise with everybody. So this session has been recorded and we will be happy to make it available for you online later on. The link will be published on our ASEAN section of the company website as well as on our LinkedIn channel. And I'm quite sure my colleagues and my most valued guest speakers will join me in hoping that next year we will finally be able to see you all in person again. But we hope you enjoyed an enlightening session and shared a lot of our insights with us today. So for today and for the ASEAN webinar series of this year, take care, stay safe, and thank you for joining. Bye-bye.
Thank you.
Bye-bye. 新年快乐. Happy New Year.